Okay, so thank you for being here today, Alastair.
Hey, thanks for having me. Great to provide an update, and always good to catch up, Jesper.
Excellent. So I guess first of all, Alastair, could you introduce yourself to the viewers and tell us about yourself and your career?
Yeah, absolutely. So I'm Alastair Still. I'm the CEO of GoldMining Inc. Been with the company about 5 years now. About 30 years in the industry. I'm a geologist by profession. Started my career working at operating mines, underground gold mines in Northern Ontario, for major operators, Kinross, Placer Dome, Gold Corp, and eventually Newmont. Through a series of operating positions, I moved into corporate development world with Gold Corp, and that was in 07. Did a lot of corporate M&A and global acquisitions, property reviews, and we did about actually $10 billion worth of M&A deals while I was at Gold Corp, directly involved with. Got into the project development side in that role. One of the projects I liked, I wanted it back. So the CEO of Gold Corp at the time sent me to South America, to Argentina, to be project director to build an operating gold mine that produced 500,000 ounces of gold in its first full calendar year from an underground mine. So it's a pretty big operation there. And then through the merger with Newmont, I was left with a choice of continue with the mothership down in Denver or try something new. And I got really excited about the gold mining portfolio of assets that had not seen a lot of recent activity. Thought my skill set and joining the team there with a good diverse portfolio was a good fit. And here we are today, and we can tell you about that portfolio and how we got here.
What would you say separates GoldMining Inc. from other junior explorers and developers?
Well, I think there's a few key things, really. The first one is probably the financial strength that we have, because we have a very sizable portfolio of publicly traded equities as well as cash, which in recent times has at times actually been trading as much as our full market cap of the company. So it's probably an undervalued part of our portfolio, but that financial strength gives us a lot of ability to fund and move forward our assets. And our assets themselves also distinguish us, because we have 7 projects throughout the Americas that are on our resource statement. Combined, very significant resource portfolio, over 12 million gold equivalent ounces measured indicated, and over 9 million gold equivalent ounces in the inferred category. So very sizable portfolio of assets, followed by a strong financial strength. And the third differentiator is the strength and depth of our team. You know, my experience, 30 years in the business with major operators. We've got a co-chairman who's led some of the largest gold mining companies in the world. Our other co-chairman is a terrific entrepreneur who's created 5 companies, the largest of which, Uranium Energy Corp, is some $8 billion market cap company. It's grown remarkably fast. So a team of experienced individuals leading a very depth-driven portfolio as well.
So to set the stage, especially for those that aren't familiar with gold mining, could you summarize your equity holdings, your core assets, and also what's the market cap?
So the market cap, plus or minus on a different day, I think they were recording this, is about 400 million Canadian market cap. We've talked about the resource statement. There's 7 projects, so sizable resources. Cash on hand last quarter end, I think, was 6.5 million. Was the cash on hand. So we've got cash, we've got equities, we've got the portfolios. The equity holdings is probably, there's 2 significant ones, and they're both from companies we created, actually. The first was Gold Royalty Corporation. Almost 5 years ago now, we spun out a new company with royalties we created on our portfolio of assets. We launched that on the NYSE American. It raised $90 million in its IPO. Today, we own 21.5 million shares of Gold Royalty Corp. Market value on that is about $80 million US. That's one significant equity holding we have. And the second of the 4, but it's the second biggest one as well, is our holding in US GoldMining Inc., a company we created just over 2 years ago to move our asset in Alaska, the Whistler Gold Copper Project, into its own vehicle, to raise its own money, to focus and dedicate advancing that project. And we have close to 10 million shares in that company, with a market value of about 120 million US dollars at the time of our recording. So just those 2 holdings alone are worth close to 200 million US dollars. and we have holdings as well in Nevgold from an asset we spun out, and also Australian Mines Limited for another asset transaction from a pre-resource project in Brazil.
Where does that leave your enterprise value at?
Well, the enterprise value on any given day, because we have no debt, I think it's very important to mention there is no debt. So the enterprise value is plus or minus, the day of the recording here is about $100 million. If you look at the cash minus the equities, Canadian, this is Canadian, so 70 million US dollars. And remember that enterprise value then has to cover 12.5 million ounces gold equivalent and measured indicated, and they're almost over 9 in the inferred. So you can see those assets are actually very value price driven. That's one of the great opportunities for investors here, is exposure to re-rating and increase in value on those assets, which are driven by our key activities. Which I guess the other part of your question was listing the key projects, and that's where we are focused on projects such as Sao Jorge in Brazil. We've just conducted the largest drill program in our company's history. We're moving forward our Yellowknife Project in Canada, high-grade greenstone deposit in northern Canada. As well, we have a PEA study on our Mina project in Colombia, which is gold and copper.
How much cash do you have right now on hand?
So it's about $6.5 million in cash at last quarter end. So we're fully funded for all of our projects. And I would point out the last time we did a public equity raise was in 2016. So I think I just emphasize that because we've been efficient with our cash and efficient managing cash and bringing cash in from other sources such as equity deals and working JVs and farm outs as well have brought in cash along the way as well. And as we talk about this portfolio of assets, and we can get into the details of certain assets, and we think about the cash and we think about the equity holdings, one might say, well, that starts to sound quite complicated. And I like to say, well, actually, the complexity is actually the simplicity, because a complex portfolio really just means we have optionality and exposure and leverage to the gold price. That's one thing we have in spades. There's an abundance of optionality with the portfolio of projects where we can be selective. We rate and rank the ones we want to focus on. We can target those. The others that are not core at the moment, there's very little holding cost. So there's opportunity to bring in new investors, new JV partners, or simply wait for the right moment for certain assets to move forward and unlock additional value.
What is your annual G&A spend?
Annual G&A, it varies because there are some variable costs in there, but it's in the range of $5 to $10 million per year on a US dollar
Canadian?
basis. US dollar basis.
US dollar basis.
Yeah, sometimes okay. I flip back and forth between currencies and apologize for that. But yes,
that's fine. US. But the cash, the $6.5 million, was that in US or Canadian?
That was CAD dollars, yeah.
So essentially now, could you summarize the year so far for gold mining?
It's actually been one of the busiest years in the history of our company. We've had a number of key accomplishments. First of all, we've completed now the bulk of the exploration activity, which was the largest drill program in our company's history at our Sao Jorge project in Brazil. We've just started to release some of those results, and we can get into some of those details as we move on. We farmed out one of our non-core projects in Brazil, a pre-resource project, and we headlined a value of $7 million, and that was in July. And I emphasize that as a pre-resource project that most people didn't even know we had that. But we unlocked value by bringing in cash and shares and a company committed to putting real dollars in the ground, and they're actually drilling that project today. So we've gained exposure there. We've uncovered a new opportunity of our project in Peru. We've identified antimony with our Crucero project, a previously unrecognized asset there. It's a sizable resource as it is, 1 million ounces of gold measured indicated and a further 1 million ounces inferred. The antimony had never been looked at, but as we've shown in several recent releases, we've identified a significant occurrence of antimony, which will lend itself into working forward on a new resource estimate, which runs a gold equivalency. And with antimony at record high pricing and a very strategic element, that's attracted a lot of attention. We also did, for the first time, we raised a small flow-through funding to reactivate our Yellowknife project in Northwest Territories. So that's moved forward significantly. And as well, I think it's important to point out that within our equity portfolio, two of our core assets have made material advances this year. The first of which, Gold Royalty Corporation, the value of our shares there, and we have 21.5 million shares, have increased about 200% year to date. So our position has grown nicely, and they've turned a nice corner by becoming free cash flowing for the first time. This is a company just over 4 years old. It's turned that corner very rapidly and has a very strong projection for increased cash flow going forward. So that's significant. And as well, within our newly created US GoldMining, that's a company also which has announced significant gains to its resource and has also announced it's on its path to a PEA on a very large resource project in Alaska, which is getting a lot of positive attention with support not only at the state level, but also at the federal level as well.
Let's move to Sao Jorge, which I guess now is your core asset of the 100% owned asset within the company.
Well, it's certainly one of our core focus areas, I would say, for sure. We can have the debate about, where
Sure, yeah,
where
you have more ounces at some other projects, so yeah, I guess you could
right.
have the debate
Yeah,
that. But at
but
least
certainly
a
core asset in terms of what we believe is the potential and the value of the project. It's certainly one of our core assets, and it's one that we backed up that statement by announcing and recently materially completed most of our drilling that we announced this year. We said we would drill over 5,000 meters between core and RC, and we certainly have done that. What we have there is a sizable resource, total indicated just over 19 million tons at 1 gram per ton for about 625,000 ounces in the indicated, and a further 5.5 million tons at about 0.72 grams per ton for 172,000 ounces inferred. So it's a significant resource. It's at surface with a grade close to 1 gram, and is right beside a major paved highway within 2 kilometers. So it has excellent infrastructure, good grades. And our program this year was meant to do 2 things. One is targeting the resource itself to see where there are opportunities for expansion, both along strike and at depth. And the second key component of the program was really for the first time step away from the deposit to see where we might enhance our targeting for new zones, parallel zones, repeats of the same style of mineralization in what is a very large and prospective regional land package. And remembering the style of mineralization that we see at San Jorge is essentially the same style of mineralization that we see at Tocantinzinho, which is along strike or along trend from us about 70 kilometers to northwest. And I emphasize that because Tocantinzinho is the first major commercial scale gold mine in the region. It's producing by G Mining. It's just come on production within the last year, commercial production. It'll produce about 200,000 ounces of gold per year. And San Jorge has a similar style of mineralization. Key difference, though, at Tocantinzinho is they were drilled to about 400 meter depth. And currently at our resource, we're only drilled down to about 200 meters. So we've only tested half the depth that they have eventually tested at Tocantinzinho.
What assumptions went into the MRE?
These assumptions for our mineral resource update already seem quite dated by where we are today, but we did that earlier this year, and the gold price we used was $1,950 per ounce. I think it's fair to say that a mineral resource estimate or PEAs that we're seeing in today's market, I think are coming in the range of $2,600 to around $3,000 per ounce. That's where most of them are falling these days, and that may even rise going forward. So although it's within a year we did our resource estimate, it's already quite, I think, conservative on the pricing at 1,950 US per ounce.
And what did you assume for recoveries and strip ratios?
The strip ratio is probably a bit too detailed for our level of resource that we put out. They usually come out in a PEA, so we haven't done a strip ratio, but the recovery was assumed to be about 90%. That was from metallurgical test work. It's a fairly clean ore, needs a bit of a finer grind to get to that 90%. And just as a benchmark, we see that the recoveries that they're getting at Tocantinzinho is on a commercial scale is about 90% as well. So it's certainly in line with what the producers in the area are getting as well.
Perfect. And how much drilling has gone into the resource itself?
Well, there's actually been a lot of drilling on the property. It has been very focused, though, pretty much on the resource itself. There's very little stepped outside of that. It's close to 40,000 meters has been drilled, mainly by previous operators. Some of that drilling has been done by ourselves over the past couple of campaigns, but it's a significant drilling. And the other nice add-on that we have that provides additional confidence in the resource, there was a small garimpo on top of the deposit some 20 plus years ago. Those artisanal miners have long since moved on. But they mined down maybe 7 meters through the soft digging saprolite material to the top of bedrock. And from that pit bottom, we were able actually to map out and sample on surface. So we have that information, and that's been sort of key component feeding into our block model. We have the drilling underneath the deposit. We have the mapping and sampling from surface, essentially, on top of that to guide us in creating a strong geological model for that as well.
Where are the primary expansion directions for the deposit?
Yeah, it's still looking to close off along strike to the northwest. A little room on the southeast as well. Fully open at depth, has not been targeted considerably at depth. I say most of the drilling targets in and around 200 meters, which by even an open pit scale is quite shallow. So there's room at depth. And what we don't know is that the main trend of this mineralization, as I say, it does extend for tens of kilometers to the northwest and the southeast. What we don't know is where do new zones open up? Where are either dilational zones that open up at the intersection of usually structural controlled elements? The main trend often intersects an oblique structure, and that often causes an opening up of the conditions necessary to cause additional mineralization. That's where we don't know where we might have additional mineralization across many kilometers of strike length, still untested on the project area right now.
And finally, how thick is the deposit?
It's a good question. The mineralization that we've mapped sort of at the bottom of the pit was up to 80 meters in places. So you do get considerable thickness. It's generally tens of meters wide, and I say up to about 80 meters of thickness. And that's exactly what you'd like to see with for an open pit is continuous zones of good, solid, thick mineralization coming right to surface, which we've mapped here to confirm.
Could you explain this year's exploration program at Sao Jorge? I mean, how much have you so far drilled? How much was diamond? How much was RC? And where have you? What questions have you been trying to answer with them?
Yeah, no, it's a great question. I said two key elements. We're looking for the resource expansion and new targets on a very large regional package. Remember, we're 46,000 hectares here, so it's a big land area. Three components to the drilling this year. RC component, which is the first time we've brought RC onto the project. So that's new. That's exciting. That's a new tool that lets us target up to, say, 50 to 75 meters depth at a much more lower cost than the diamond core. And we've got, so there's an RC program that was done this year. There's a few thousand meters of RC. We've also brought diamond in. I think we did about close to 4,000 meters of diamond core. And then the third component is an auger drill. And this is a truck-mounted drill that can target through relatively shallow, overburdened material and to the top of saprolite, right to the top of bedrock. And really, it's a targeting tool where we think that most of the cover material that we're sampling there has had minimal transport in many locations. So we can start, and really, it's a sequence where we will do soils and regional sampling to identify anomalies. We'll follow that up with auger drilling to confirm that material is actually has a source. RC can test that to bedrock, and diamond, as needed, can go deeper. So each stage of that process adds further information. Each one comes at a higher cost. But this year's program was a good balance of auger, RC, and diamond core as well.
How much of the holes have been released, or how many meters have been released, and how much is left to be released?
The vast majority has not been released yet. So the first program is really first few zones from the RC drilling. So we have all the auger drilling to go, the rest of the RC drilling, and the core drilling has yet to be released. So we can expect to see more results in the coming weeks and months. Those results are being compiled. We'll do our QA, QC checks, and we'll be putting those out as they become available to us.
And so far, you have found narrow, narrow intercepts of good grades, 1 meter intercepts. They are close to surface at multiple of your targets, but how do you interpret that, and what makes you think that there might be thicker zones? And also, are you following up on that?
Yeah, no, exactly. Well, the type of mineralization that we're targeting, because we're drilling largely vertical holes, we don't know the angle which we're intersecting zones. So the RC core is trying to determine, are there sources of potential high grade that represent the mineralization that we see at San Jorge. And remember, San Jorge can have widths up to 80 meters, as I've talked earlier, or it can be 100 meters of core length, but true widths typically up to about 80 meters. Within there, we see a series of stacked quartz veinlets, quartz stringers, and sulfide mineralization dispersed over that broad interval. So really what we're looking for is not necessarily we're hoping to hit 80 meters of mineralization. That'll be right on top of it, and that's kind of a long shot. We're looking for the indications of where the mineralization will be. Then we can vector in on those targets to see where we have more continuous zones of mineralization. So yes, when we see in RC samples that are half gram per ton or even a gram per ton over a meter or a few meters, that's a very strong indication that we could be part of a system, and we just don't know where we are in that system. That's why we'll vector in on those to see if we can intersect it more completely with follow-up drilling.
Have you followed up so far?
That's really effectively going to be the 2025 program. So the zones that
25
we target,
or 26?
2026, yes. I'm losing my my calendar here, but yes, that's next year's program. This year's program, we've identified and we're quantifying those targets. The 2026 program, which is part of our ongoing and current budget process right now, because our fiscal year end is November 30th. So we're just in the budgeting process. This month is our key budgeting month. We're laying out and developing our exploration plans for 2026 to follow up on those programs. And I think it's fair to say that we will be mounting another significant program again next year at San Jorge.
And the results that are left to be released, roughly where have those been drilled? At least for the RC and diamond, we can skip the auger.
Yeah, most of the diamond holes are much closer to the deposit. We've tested along the flanks, and we have a couple of holes that were drilled testing some of the depth extensions. So that's where the diamond cores will be coming from. The auger are really quite a dispersed area. So we've used that as more of a regional targeting tool. So they're from quite a broad area, and the RC is targeting generally within 3 to 5 kilometers from the deposit is the area that we're targeting. A couple of the programs were a little heavier this year to some of the western areas of the deposit, where because of where our permitting is and where the condition of the claims are, we're trying to see if we can get some better definition on those as part of our exploration requirements, that we have a little more advanced studies on those claims. So we focused on some earlier stage work, part of the San Jorge system, but specific to a few claims that needed to be focused on a little more this year because of the claim renewal process.
And what's the all-in drilling cost per meter here for diamond and RC?
It's a little hard to quantify. I would say, well, our total drill program this year was about $2 million US, and within that we'll have say it's over 5,000 meters of total drilling, plus there's auger and there's a significant IP program as well. Our drill cost, I would say, as a good rule of thumb, is about direct drilling about $250 a meter. It's quite accessible here. It's not remote, and that's one of the reasons we can keep the drill costs quite reasonable.
US or Canadian?
That's US.
US, okay, good. And so next year, in other words, you will follow up on these targets. You will have probably define new targets. Will you continue to try to grow the existing resource?
I think that the focus will be the same thing, trying to grow resources into mineable. And I think what we're starting to see is that this resource itself, at current gold prices where people are doing PEAs, we think we have an economic deposit there, and then it would be up to us to demonstrate that through a PEA of what scale and scope, even at the current resource level, never mind growing it, that it would be economic at these conditions. And I think it's not too much of a stretch to imagine that it would be a for the right sized development project, a very good opportunity to demonstrate the economics at, I say, current prices where PEAs are landing these days.
So how big would you like to grow this at least to before you do a PA, or how are you thinking around that?
I'm not sure there's necessarily needs to be a defined size. I think it's more about making sure we understand where the key boundaries are to mineralization. I think it's one thing to race into a PEA where you don't know the extensive mineralization because you're really doing a snapshot in time. So we want to try and understand better the limits of where we might have mineralization before we go into a PEA. But it's certainly an opportunity in front of us. There are a lot of people asking about near-term development opportunities, and we've seen how GoldMining have brought a very sizable operation in the district into production very quickly and efficiently. It's a wonderful jurisdiction for operating. This is Pará State in Brazil. So if there's an opportunity to make this into a more advanced development opportunity, move it along quicker, that's certainly something we're going to be looking at when we compile the drill results this year as well.
Do you think that will be you that moved into a development phase or
We
another?
certainly are well experienced to do that and have the capacity. However, I always say that we will always move our projects along to continue to unlock value for our shareholders. If we think we're creating the best value by doing that, we'll do that. We have had groups, no secret, to be down looking at the project, and some of those are significant companies, much bigger than ourselves. So we'll have to weigh out the various opportunities in front of us where we think creates the best value for our shareholders.
How long's permitting process here? If you would like, if you would like to get permits for construction in the future?
That's a good question. I think I just want to use it as an illustrative example, but again, I use the work from GoldMining as a sort of a benchmark and as an example. I think once this project sort of is green lighted to move forward, I think this could be very quickly permitted and brought into production. It's a matter of probably a couple of years type time frame for permitting and development. So it can be very rapid.
So let's talk about US GoldMining. Could you summarize the work that US GoldMining has been doing this year?
Yeah, no, an example. And just to reiterate, we are the largest shareholder of US GoldMining. We own, I think it's about 76%, 77% of the shares. So a big majority. We have crossover management. And so we're very in tune to what's happening at US GoldMining. And US GoldMining has grown a very significant gold copper resource in Alaska. The state has announced plans to develop a road to it, so it has infrastructure as well. We're seeing recent announcements by the U.S. federal government to back and support projects in Alaska. They've granted permission for a recent road build on a road that was hung up in the past. Fortunately, we don't have challenges with our road of that nature at this stage, but it shows the federal government is willing to step in to support Alaska as well. We've also seen the federal government announce an equity stake in a development project, the Trilogy Mine. So that's the first time I think I can recall where the U.S. government is actually putting cash to work as an equity investment in a junior explorer developer in Alaska. So that's very positive. On our own project, we've advanced our studies from last year. We've started a PEA. So that's the first time a preliminary economic assessment has been launched on the project, targeting completion by the end of the year. In parallel with that, the team has been underway with an exploration program this year, which is really designed to start to test and target in on what we see as a growing cluster of porphyries. Porphyry style of mineralization is a type of deposit that hosts some of the largest gold and copper deposits on the planet, particularly common in South America. You hear porphyry systems in Peru and Chile in the Andes. That's big, broad, wide zones of mineralization. It can be multi-million ounce or larger deposits. So that's a good style of system to have. That's what we've identified at the core Whistler deposit. We think we have a cluster of these. So that means we have numerous porphyries coming together, sort of poking through to the top of the surface in a cluster. We've identified at least one and probably a couple more. The targeted drilling this year was actually to better define those so we can target that for core drilling next year to see if we can add to the resource and grow it significantly. particularly focused on what we see at the core Whistler deposit, which has this higher grade gold copper core, which is the focus. So it's not necessarily just about adding ounces at Whistler, it's that high quality core that we see there, which is really the focus moving forward.
So how much did you drill?
We have, I think it was 179 holes we drilled this year. These are scout holes. They're quite shallow holes. They're designed to test the top of bedrock in a swarm around the main deposit. No results have been. No, there's no diamond drilling this year. This was a scout drilling. It's called shock auger drilling. It drills to top of bedrock. So it's not resource expansion drilling. This is targeting for new discovery to expand within. It's all within a kilometer or two of the main deposit. So it's close to the existing camp. It's road accessible and would be a nice add-on if we can put diamond drill core to it for next year.
And could you give us an update on the metallurgical improvements?
Yes. So I think one of the things that sort of jumped out to us in the resource statement for the Whistler project for US GoldMining was the fact that had good, decent recoveries, and the metallurgical test work that had been done in the past that showed 83% recovery on the copper, but only about 70% recovery on the gold. And since it's a gold-focused deposit, about 2/3 of the value of the deposit, 2/3 to 70% is on gold. So seeing that only 70% recovery was identified, we saw that as an opportunity, and metallurgical test work focused on that this year, and it's shown a significant improvement in the gold recovery. It's north of 85%, so risen from 70% to north of 85%, and that's come about by really adding a new component onto the metallurgy. So rather than just floating a copper concentrate, which was the previous study, this time through there's an additional segment which leaches the tails from that and recovers significant additional gold to get that recovery up over 85%. And we think that will have a positive impact as one of the components of our preliminary economic assessment that's underway right now.
When will you release the PEA?
Targeting for the end of the year, although that may extend into the new year, but depending how late it goes. As you can imagine, in this market, a lot of the consultants and groups that we're working with, they're completely overwhelmed with the demand for projects and activities right now. We're still targeting the next few months, though.
And what is the plan post-PEA?
That's a great question. I think the first component of that will be the PEA will no doubt identify a number of opportunities that require further work and testing and clarification on. So there will be opportunities to evaluate. The most significant of those, of course, will be where can we find additional mineralization. This year's exploration program is specifically targeted for that. So targeting new zones to bring in. The other component that the PEA is looking at is, remember, at the Whistler project, there are 3 deposits. We have the Whistler deposit, the main zone. Adjacent to that is Raintree, and about 20 kilometers to the south is the Island Mountain Zone. What the PEA is looking at right now, does it include 1, 2, or 3 deposits? And if it only includes the main Whistler deposit, there obviously will be significant opportunity to bring the other 2 deposits into the PEA with additional information in the future as well. So there's still lots of variables that are being worked on and what goes into the PEA, as well as what opportunities will be presented to expand the PEA going forward.
You mean as you will do an updated PEA in the future?
It's possible. It may also indicate that we want to move forward into more advanced studies that would lead towards pre-feasibility. But I think what the level of the PEA is, because it's the first one and because we have a growing resource base with multiple deposits, there will be a lot of opportunities to enhance that PEA before we necessarily move right into a direct PFS study.
And from US GoldMining's perspective, do you think, the end goal here is that to bring this to hopefully a sale or a JV? Are you looking for a JV partner, or how are you, or would you like to take this? Obviously, you will do what's best for your shareholders, but give me some more color on your thinking around advancing.
Well, obviously that's the standard answer. Yes, we want to do the best for our shareholders, but the reality is we have one of the largest gold copper projects in the US that's not had a backing by a larger company, such as a major with a strategic investment or a JV partnership. We think that project, and we know that project, is highly sought after, particularly because of the importance of copper within the asset and the importance of having a state-backed infrastructure program that's targeting accessing the project. We think that makes it a very attractive target. Having said that, though, we continue to move it forward. We have the strength in our team. We have the capacity. My background is working for major operating companies who have built similar projects. We have our CEO, Tim Smith, who's come from the world's largest gold miner, Newmont, to lead the effort. And I think also importantly, just within the last couple of months, US GoldMining added a new strategic advisor to the team, and that being Barry Olson. Barry Olson is an experienced mine builder and developer. He's worked for some of the largest companies in the world developing projects, and in fact, he built the largest gold copper mine, gold lead zinc mine actually should be in Peñasquito in Mexico. So a major scale operation. He's experienced building and operating. So we've brought him on as a strategic advisor to our board, and really I think that's indicating that not only do we have the technical abilities, but we have the strategic abilities, and we'll have the financial backing from our largest shareholder, GoldMining and Gold Royalty, and the foundation that brings with it to move this project forward. That doesn't mean that other companies won't come to look at it. That's something certainly that will be very much happening in this market and has been happening. We can't control that, but what we can control is moving the project forward ourselves. And if we have a more compelling proposal, we will certainly entertain that.
Perfect. And how are you thinking about bringing in more capital to use gold mining?
Well, I think in this market, there are certainly a lot of options available to us. And there's been a lot of recent injections of new capital back into the gold space. So I think it's fair to say that we have high confidence that we'll be able to announce plans for 2026 in the not too distant future. And we'll certainly have a strong financial plan to back that. The company has cash. There's also a number of warrants from the IPO, which were recently in the money, and there's close to $20 million of warrants that were in the money recently. At today's pricing, they might be very close to being in the money, and they're coming due for expiration in early first half of 2026. So there could be an inflection of cash if those warrants are exercised as well.
And from you, gold mining's perspective, do you see yourself holding on to your shares or gradually divesting shares?
No, we're definitely long-term investors there. I'm a co-founder and and also chair of that. So we do wear multiple hats, and we're very long and bullish on that project. We think there's a lot of room to grow and add value, not only for US GoldMining shareholders, but for GoldMining shareholders owning 76% of that company as well.
Perfect. And so Yellowknife, which you raised $500,000 for this year, could you give us an overview of the Yellowknife project?
Yeah, and I emphasize, the $500,000 we raised for Yellowknife this year was really just to start to awaken the project. We have not really done significant work since acquiring it close to 10 years ago. What I like about Yellowknife, it is a very significant mineral resource estimate. There's about 1 million ounces measured and indicated at a grade above 2 grams per ton gold, with the vast majority of that being an open pit constrained open pit resource. It has also over 700,000 ounces, again above 2 gram per ton in the inferred category. So it's a sizable mineral resource, we think, with very strong open pit potential at a grade of about 2 grams per ton. I think anywhere in the world that's a significant deposit. That project, the mineral resource estimate was done at a price of $1,500 gold, so significantly lower than today's gold price. So it's not only an opportunity created by a gold price, but it's also an opportunity because of the quality of the resource. It's located about 70 to 80 kilometers north of the city of Yellowknife, so it's not far from major infrastructure. It does have a winter road It's not necessarily built every year, but when it is built, it runs right adjacent to the project, so it has good access in the summer where there's an airstrip and there's a float base you can land at, and the winter road can bring in heavier gear with a sizable resource. And one of the keys that gets me particularly excited about Yellowknife as we develop our path forward here is, I think back, and many of your followers and viewers will think of the major discoveries that have been made in Canada in the last 20, 30 years. A very high proportion of those discoveries have come from modern exploration at past high-grade underground producing mines. And what I'm talking about there is the major discoveries and the success that was had at places such as Red Lake, which was a underground mine that saw modern exploration mainly through Goldcorp, brought it into a major high-grade zone. It mined close to, in the core of the high-grade zone, it was running almost 100 grams per ton, a very high-grade modern discovery. Similar successes at places like Kirkland Lake, with a depth extension of Macassa. And in fact, that's where I did my master's thesis originally, to help support some of that discovery. And then we've seen even more recently with Osisko mining, discoveries at Windfall, which was a past small-scale high-grade underground mine. So these old high-grade mines have led to major discoveries. And what we have at GoldMining on our Yellowknife project is probably one of the highest grade past producing mines in Canada that has not seen modern exploration. We have the Discovery mine on our property. And again, I emphasize this is not included in our resource statement. It's adjacent to our resources. But the Discovery mine from 1950 to 1969 produced over 1 million ounces of gold at a grade of over 1 ounce per ton. So a high-grade mine by any standards. It was shut down in the 60s when gold price was still probably $35 per ounce, and has not seen modern exploration. And with these systems, and this is where my background came from, working in Kirkland Lake and the Timmins camps, porcupine camps of the world, this is an Archean greenstone. And the Yellowknife camp itself has produced somewhere close to 15 million ounces of gold. We're a long trend from that along the Yellowknife greenstone belt. And what typically happens with Archean greenstone belts is they often can have strong horizontal extents, but more importantly, they can have significant vertical extents. And those vertical extents means that you've got a deep-seated system that was fueling the system that deposited the gold, a long, long time ago. These are Archean age, so you're measuring the time in billions of years. But very old rocks that have deep-seated, crustal related. And when we see a deposit that's been mined down to about 1,000 meters, but to relatively short strike length at a grade of over 1 ounce per ton, that's an exciting target that could be fueling a bigger system. And so as much as we have an existing resource, we see this as an exploration opportunity to grow this in the belt as well. And we're pretty excited about Yellowknife. Again, much like Sao Jorge, we are in the budgeting process right now. It's approaching our fiscal year end, so we're laying out a scope and a plan for advancing Yellowknife in 2026.
Let's move on to your earn agreement with Australian Mines. So could you explain the terms for the earn agreement with on Boa Vista?
Yes, absolutely. So Boa Vista, this was something we announced in just July of this year. Boa Vista, just to frame it, it was one of our smallest projects. It was a pre-resource, so it does not show up on our resource statement. It was not necessarily a high priority for us in terms of where it was. We were more focused on Sao Jorge in the district, and this is quite a bit more remote. Sao Jorge had a local team and brought expertise in. And what they offered us was essentially an earn-in option that lets them commit dollars in the ground. So there's a 3,000 meter drill program commitment they have to meet. They're making cash payments to us. They've made share payments to us. These are staged throughout. They can earn in up to 80% of the project, and we will retain up to a 20% interest in the project. And again, for me, it's important is that this is a a staged earn-in that it's also all or nothing. If they complete part of the work and don't finish it, we revert back to having 100% ownership. But it's important to have their team, and we evaluated not only their financial strength but their technical team as well, and we were pleased with what they had in Brazil to manage that. I'm pleased to report they've already started the drill program at Boa Vista, so that's great. It doesn't cost us any money. Actually, we're getting paid for them to drill it, which is nice. They've already made cash and share payments to us. That first payment of shares has already almost doubled in value, which is a nice benefit, being paid in shares in this market. So that was a nice benefit. And on an annual basis, there will be additional cash and share payments, as well as additional drilling requirements to move it forward. So it's a perfect win-win for us. We can stay focused on our core projects. We've brought on a new partner. We've added significant equity in their company. It's just about 5% right now with the first payment we own in Australian Mines Limited, and that may increase with future cash and share payments as we move forward.
Great. So then also, could you give us an update on the RIA Uranium project in the Athabasca Basin?
We'll talk about a wild card within a company called GoldMining Inc. We've shifted to our uranium asset, which still to this day, I'm still trying to remind people we have. We've had this project since, I think it was 2013. The acquisition of Brazilian gold had the RIA project, which is in the western Athabasca Basin, so it's Alberta, Canada. And the Athabasca Basin hosts the highest grade uranium deposits on the planet. So it's a strong producing area for uranium in Canada, primarily on the Saskatchewan side. But the nice thing about geology, it doesn't obey provincial boundaries, so it extends certainly into Alberta as well. And what we have is a very large regional scale project with 125,000 hectares. Orano, the French multinational uranium company, is a 25% partner. We have this project. It's in the heart of uranium country. We've just released a 2025 new technical report. We've received drill permits from the Alberta government to drill it. So it's drill ready, permitted, targets are there. It's got known occurrences of uranium. We think in this rising importance and pricing for uranium, it's a good opportunity to try and unlock value for our shareholders on something that largely is unknown and certainly is non-core to us being a gold-focused company.
So do you think it will get drilled next year?
That's a good question. It's certainly something we could push forward, and I've always emphasized that we have a couple of options here. We can certainly push forward a program ourselves, not our focus and may not necessarily be our preference, but with the right partner, we could certainly see this advanced quite quickly because I say the permits were granted around middle of this year for drilling, and the drilling here could occur summertime or wintertime. It has had both in the past to support drilling. It doesn't need summer conditions or winter. It could happen either time of the year.
But I think you will do it, not or I mean, maybe in conjunction with Rhino, but not.
Well, it could be an altogether new partner come in. I don't believe, I can't speak for Rhino, but I don't believe they would advance it themselves. You know, they're not looking to divest their interest, but I don't think they would lead the program themselves. I think they would certainly be very keen to evaluate that and see whether they want to participate in their pro rata interest. But I think it's either be GoldMining moving it or a third party, most likely.
What does success look like at the RIA in terms of intercepts?
Well, it's a good question on intercepts. I think more important for us, not being focused on the uranium, would be how do we unlock that value for our shareholders? It's one thing to say we have that project, but how do we quantify that and how do we measure that? So I think that if there's a value unlocking event that we can demonstrate that value, maybe it's an equity, maybe there's a cash payment or share payment, some event to show we've created value for our shareholders. I think that's the more relevant metric there, rather than getting to the specifics, because what I don't want to do is try to pretend that we're going to become a focused uranium company. We're not. We can do the work, and we've got a technical team and support from a group in Saskatoon who can do that work for us. But I really don't want us to become a focused uranium explorer.
No, okay. I was more asking, sort of, is this you view RIA as a bulk tonnage, larger uranium target,
No.
or
I
is it more
think
a high grade,
sorry,
smaller
that's a
target?
good question. That style of deposit is a typical little narrower style, but higher grade. That's the nature of the mineralization you're seeing there. And the nice thing about this part of the basin where we're located there is that it's actually quite near surface. Deeper parts of the basin can be several hundreds and hundreds of meters even before you get down to the productive zones. We're relatively shallow there, within probably 200 meters, the targeted horizons.
Crucero, could you give us an overview of the Crucero project and next steps, and also what do you know metallurgically of it?
Yeah, so Crucero is significant because of the identification of antimony. And antimony has skyrocketed in value. Last I looked, I think it was above $60,000 a ton. And there's companies and countries clambering and fighting to get a reliable supply of antimony. We've seen the US government back antimony projects themselves and fast track projects. They've made cash investments into projects directly at the federal level, as well as backing equity and permitting of projects as well. So it's very, very relevant. It's a good, significant gold resource by itself. The antimony just makes it better. And we have had 3 announcements this year announcing the gold equivalency with the antimony. It's going to raise it significantly, tens of percent on a gold equivalency basis. What we have coming up is likely to begin a new resource estimate with a gold equivalency. We're compiling information for a composite recovery sample. While the project has had recovery work for gold that was part of the resource estimate, we really haven't studied the recoverability of the antimony. So that's a basic study that we should be launching here. And we've already started the work to collect a sample. And that metallurgical work on the antimony will be informative on moving forward with a new resource estimate, which brings in a gold equivalency by incorporating the antimony.
Okay, and so metallurgical test works will be done next year on
I
the
think we'd like to
antimony.
get it started by the end of the year. I said the work has already begun to begin the compilation from the cores. We think we can use the existing core. The beauty is I was just down to Crucero in August this year. The core is in good shape. We drove up to the project. It's great to see the mineralization come right to surface there. It's a terrific area to be exploring in southern Peru.
So let's move to La Mina, a substantial gold and copper project in Colombia. How essentially gives a quick overview on that, and also how do you plan to unlock shareholder value out of La Mina?
Yeah, so La Mina is by definition is our most advanced project because there's a 2023 PEA study, preliminary economic assessment. It's a gold copper porphyry system south of Medellin in Antioquia in Colombia, so a good mining jurisdiction. The PEA we put forward on that project, I think, was significant for a couple of things. First of all, it showed good economics at a gold price of $1,750, which by today's standards is probably at least $1,000 per ounce lower than what a PEA study today would come out at. So a significant variance in the gold price as well as copper. But I like to refer to it as the right-sized porphyry in the right location. We talked earlier about porphyry systems being some of the largest gold-copper mining areas on the planet, particularly in the Andes area of Peru and Chile. Here we have a porphyry system, in fact, a cluster of porphyries, which are high grade by the definition of the porphyry system. And porphyries can be copper rich and they can be gold rich. And we happen to be lucky here in that we have a gold rich variant. So again, about 70% of the value is gold, 30% copper. And it produced a very significant mine plan, 10 plus years, over 150,000 ounces per year gold equivalent at a grade above 1 gram per ton, all sort of key metrics within a reasonable capex. It's not at 5,000 meters in the Andes. It's not a 5 billion capex project. Very modest capex in a buildable location with good grades and room to expand. So that PEA was a great foundation. It showed solid economics, good NPV, IRR, and at a gold price that we could. We'll have to update the PEA. We can't run sensitivities on a PEA and announce publicly without doing a new PEA technical filing. But I think it's not hard to imagine at a higher gold price and tweaking the inputs there, this has a much higher economic value. And I think that is exactly our next steps, is to refresh and update that PEA and look at the economic value that this project can have moving forward.
Okay, so essentially, or if we look at your overall portfolio, what projects do you definitely want to advance on your own, especially next year? And what projects are you looking for? Probably would you like to do some kind of monetization or JV earning or some other way?
So I think it's on all the projects we've talked about. I think it's we're very confident to say that we will be advancing Sao Jorge as a key project again in 2026. As well, our Yellowknife project will be a focus of increased activity. So, really our first significant exploration program at Yellowknife. Our Crucero project in Peru, the work on the antimony for recovery and potential updating of a mineral resource estimate with a gold equivalency, bringing that in. That will be the first stage, and that will dictate the work to do there. And in fact, I think it's likely we'll start the permitting to get drilling on that. It may take a little while to put those permits in place. It hasn't been drilled in a few years, so we can start that process. And I'm sure while that's going on, there will be groups looking at that. And let's be honest, there are groups fighting for antimony projects these days. So it's nice to be in very strong demand there. We can prepare ourselves for drilling and see if we get to that stage where someone makes a proposal that's more attractive to us. So on those projects, I think are the highest chance of moving. As well, the remainder of the portfolio, most of it has a pretty modest or to low carrying cost. So we continue to look for opportunities. There may be partnerships that rise. These are things that are difficult to forecast and predict. There always are groups looking at projects, but it really has to be a fit for us where we see a strong value creation with the right team to move it forward. But there certainly will be plenty of catalysts coming up for the year. There are core projects. We have additional exposure to copper our assets. We've talked about a bonus exposure to uranium. And we have also a project newly identified with significant antimony occurrence. So it's really a great opportunity to have a strong portfolio with financial strength, depth of assets with gold and bonus metals all throughout the Americas.
By the way, and how are you thinking around? You have 6.5 million Canadian treasury. You will need more capital. How are you thinking around that?
I think we're well positioned, and again, I emphasize the fact that we haven't done a public equity raise since 2016. We have capital with shares. We did sell down one of our lower priority holdings this year. We had probably too much of a holding in Nev Gold, so we were able to raise capital by selling one of our non-core assets there. The nice thing about having a big portfolio, there's lots of optionality. We have accessed an ATM in the past to raise capital at the right moment. If we see the right price, we can do that. We have non-core equity holdings. We have JV option payments due to us the coming year. So there are a number of events that we have at our fingertips that I don't think will cause any significant dilution to our company that should have us well capitalized to fund our projects this year.
What would one of those levers be? Like Nev Gold?
No, I don't want to necessarily say that we're going to sell that. In fact, Nev Gold, we have a standstill. We've agreed not to do any further sales. We're confident there. But who knows? I mean, maybe one of those junior assets actually get taken out themselves. Maybe that's an event that obtains cash for us as well. We can't count on that, so that's why we have our own tools to raise our funds to support the exploration. But as it stands right now, $6.5 million gets us well into next year to get our programs off the ground. Anyway, we don't need to raise additional money to start those programs.
And you have two large equity investments: US GoldMining, Gold Royalty. Do you think that capital could be some of that capital could be better deployed on your own projects, or how are you thinking around those equity investments?
I'm very, very bullish on both those assets. We're long holders in those. We will not be selling those assets anytime soon. That's the thing. Those are projects we've created. We believe in the opportunity that is still ahead of those projects, and I would emphasize that Gold Royalty alone has has risen. It's one of the top performers on the GDXJ this year. This year alone, it's risen close to 200%. So our shareholders have benefited nicely by a sizable holding of gold royalty on our balance sheet.
And what are your thoughts on M&A, both acquiring new projects and also company-wide M&A?
Well, I think it's always fair to say that we're very active on the M&A front, both as acquirers and with groups approaching us to look at our assets. We're very selective in who we let look at our assets. We want to make sure only the quality companies would bring the right skill set. We'll even entertain that. We're not targeting any direct sales. I mean, companies will come to us, or we may target specific companies, but we're not in the business of just running processes. That's what I think differentiates us from being a defined project generator or a project incubator. I think those companies have a good business model, but their set focus is to actually specifically, move projects and then get rid of them. I think the beauty of our company is we have the strength to move our own projects as we see fit. If there's an opportunity that comes along, we can capitalize on that, but it's not necessarily our mantra that we have to sell things. So we're always looking to add to our portfolio. And I would emphasize there that in this market, with a sort of elevated pricing, for something to add value, it's going to have to be quite exceptional. It would also maybe have to have some synergies with one of our existing projects. So we can be very selective. With the depth of our existing portfolio, we don't have to be on the hunt. And in fact, the beauty of our company is most of our acquisitions were made over a 15-year window when prices were lower or depressed. So we actually pick things up for good value. We're not likely to go on a shopping spree when we're at the peak of the market.
And could you summarize the catalyst for next year?
Yes, I think the catalysts will be driven by some of the core projects we've discussed. So there's still exploration results to come from Sao Jorge and the drill programs there. We're working on metallurgy and a potential impact that will have to the resource update on our Crucero project in Peru. Our stake in US GoldMining, we're waiting on exploration results and a PEA there. And as well, I think there will be announcements on an activity. And actually, this year's exploration work at Yellowknife has not been released either. So there's plenty of work in the pipeline for assays to come and results to come to move our projects forward.
And where do you envision GoldMining Inc. in 2 years from now?
In 2 years. Well, I think in 2 years from now, I think you'll see a marked change in our projects. I think the money we're investing in exploration and development, you'll see higher quality projects, better value realized through PEA studies. And it's quite likely that we will have created additional catalysts to unlock value, put things either into cash for our shareholders or additional equity value to build up that portfolio.